NW 1120 AM, NW 275 CM FM, Concord, Boston. The Money Matters Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide out this month titled Building Your Emergency Financial Binder. And really, Mike, we're talking about, a set of documents that someone needs in the event that something really bad happens to them. And one of the questions that family members and friends always ask is, who should I call if that happens? And this binder should have that information in it.
Yeah, it's designed to be that one-stop shopping of, hey, what do I go for? Any number of different things that could happen, right? I mean, it could be an accident that lands me in the hospital. It could, unfortunately, be my passing. But you want a consolidated place where loved ones can go to try and find, hey, what are my first points of contact that I should make?
What are those points of contact that should make their way into this binder?
Well, I think importantly, tax preparation, estate planning, and financial advice are three of the big ones that I can think of off the top of my head. The problem is who does that and how spread out it is varies dramatically person to person, right?
Sure.
If I have 5 different bank accounts for different things, that is going to be more complicated than if I have a single bank account at a single place and then an investment advisor that's overseeing all of the investments. But again, your results could vary.
Folks, the guide this month is titled Building Your Emergency Financial Binder, and it has all this information and more in it to make sure that you are leaving a comprehensive guide for what happens if you're going through an emergency. Way to get this guide? Call 800-393-4001, or you can also request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Well, we've got one quarter in the books of 2026 for this stock market year, and we ended yesterday's quarter with a tremendous day for equities. Paul Lane, Marc Fandetti, and Tucker Silva here with you. If you're just tuning in or did not happen to see where markets closed yesterday, it was a tremendous day across equity markets where we saw the S&P 500 closing out up close to about 3%, clocking in at about 2.9%. The NASDAQ, which is a more tech-heavy sector, was up upwards of 3.5%, closing the day up almost close to 4%, and we had the Dow Jones up close to 3% as well, shading around 2.5%. So just a tremendous day for equities, as there was some continued optimism that perhaps the war with Iran would come to a halt. We have that optimism sort of percolating through markets today, as we're about 40 minutes into the trading day, with the S&P 500 up over 0.5% and the Dow Jones is up over 250 points at the moment. And that's what we will start, is kind of a recap from what was yesterday aside, which was a very good day for markets, not a particularly good quarter for stocks in general. We had the S&P 500 off about 5% over the first 3 months of the year. We had the NASDAQ down about 7%, and the Dow Jones was off about 4% as well. And this comes against a backdrop where earnings from companies within the S&P 500 have actually been quite strong. We've seen 6 straight quarters of double-digit earnings growth for companies in the S&P 500. We started this year with a tremendous amount of optimism that perhaps we would see 2 cuts from the Federal Reserve easing monetary policy. That was priced in at about an 80% probability heading into 2026. The chances of that, with everything that's gone on recently between the U.S. and Iran and this spectacular surge in energy prices, that probability of 2 rate cuts this year sits at only about a 5% chance at the moment. Far likely, looking at interest rate futures, that rates will stay the same as we're battling gas that has surged to over $4 a gallon nationally here. Really, it has gone to a point we are sort of looking at, this was quoted in one of the pieces today, a single variable market where oil and this conflict between the U.S. and Iran really takes the forefront focus for all investors out there. We have seen oil prices surge 63% since February 28th, and it continues to have a trickle-down impact to many different areas of the global supply chain for things like aluminum and fertilizer products. There's just a lot of commodity shocks that we've seen through the last month or so, and a quarter that, like I said, Mark, was not particularly strong. Of course, the energy sector did perform quite well, but looking at the rest of the remaining sectors, the S&P 500, not a strong quarter for markets.
Yeah, going into the new year, the concern was, and this is a little bit retrospective because we now know we now have final unemployment and growth data for the end of 2025. But the concern was the economy was slowing. Mm-hmm. 2025 was a much slower growth year. GDP grew about 2.2%. Prior year was 2.8 or 2.9. Year before that was 2.9 or 2.8. I forget which. So growth slowed by a lot in 2025, and we had no job creation. So the thinking was, well, the Fed's got to stimulate demand, goose the economy, and that'll probably be good for equities. That'll be good for earnings. And then, of course, we get hit with this war in the Middle East, and that changes everybody's calculus. It exacerbates concerns about the slowdown in demand because we're all paying more for energy prices. That means we're spending less on everything else. And it also amplifies inflation pressures. The Fed went from maybe cutting once or twice to entertaining the idea, though not that seriously at this point, that rates may actually have to go up.
Right.
Even though the Fed can't control oil prices, the Fed can control inflation expectations, and it can control how much we spend on everything else. So it has to decide whether they want to accommodate this huge stagflationary shock, the biggest in 50 years. I'm not sure markets have come to terms with how big this shock. I'm not talking recession, by the way. Stagflation doesn't necessarily, and the stag is the growth part, stagnation. Deflation is the inflation part, obviously. I don't think we're at the point where serious people should be talking about recession, but we are way past the point where this is going to push inflation up.
Way past the point.
I'm sorry, the oil price increase, the oil price shock. Pardon me, I didn't explain that well.
Yeah,
the oil price shock will increase headline inflation.
Oh, absolutely.
Question is, how much? It's
right.
That's
for how much
that's
for
trivial.
How long?
How much? How long? What is the Fed? Maybe we'll get into it later in the program. I don't want to get on my Fed rant too early. There's always plenty of time for me to do that because you're very generous. But I don't feel like I answered you. I feel like I went off the rails a little bit there.
No, I think it set the table nicely. We're kind of recapping what was a tumultuous first quarter for equity markets. It's largely due to everything post February 28th.
It's all the war.
Yeah, it's all the war.
Like you said, they're trading
it.
on one phenomenon right now. There's implications for other things, but it's all about the war.
It just seems like forever ago when we had the Supreme Court ruling on tariffs, which was a significant issue heading into this year. That seems like a mere footnote at this point in time. And the concerns over the labor market were probably the other one that I'd point to heading into 2026 as to an area of the economy that we as investors or people who follow this stuff and just people who follow the markets in general were most concerned about because of that point that you made in 2025. We really had minimal job creation at all, and that trend, it hasn't deviated from that really in terms of what we've seen for the first few months of data here from the start of 2026.
Yeah, I mean, that's not, look, if you were in the, inflation still needs to come down a little bit to achieve the Fed's 2% long-term goal, continued normalization. I'm going to call it normalization of the labor market, though many would disagree with that characterization. A continued slowdown, less controversial way to say it, was probably welcome. That's what's necessary. You've got to slow it down. You've got to slow things down to reduce inflation. Now, of course, you've got this oil price shock, and it's the biggest mess I've ever seen or read about, frankly. Inflation above target, fiscal policy totally out of control, 6-7% of GDP deficits. We've got no room there if, God forbid, the government does have to spend a lot of money in a short period to fight a recession, for example, or something. I mean, they'll do it, but it's going to have dire implications for interest rates. Things are really a mess right now. In many ways.
We did get some economic data that came out this morning. The retail sales reports was released this morning at 8:30 a.m. We did see that consumer spending, this is for the month of February, did surpass economists' expectations, coming in at about 0.6%. That was above analysts' expectations of about a 0.5% increase. In terms of the area where we saw the most spending momentum, we saw in department stores and just retailers in general saw a 2 to 3% increase on the spending front. Also saw some increases on clothing and sports goods, hobby and musical instruments, and bookstore sales. All of those were up upwards of 2% or 1% in terms of what we saw on the retail sales side of things. Again, this is something that is something we track, the retail sales, to kind of gauge the health of the consumer. It is backwards looking to February of 28. All of the, things that we're dealing with on the inflationary front really haven't trickled through to the impact of March's data that we'll get at a later point in time. So it's not really moving markets much at all. Really, the major focus continues to be everything that's going on between the U.S. and Iran. What we're looking at here on the energy market fronts, we do have oil prices falling just shy of about $100 a barrel, $99 a barrel on West Texas Intermediate. Brent is down about 2.6% to 101 a barrel. And like I said, overall with markets in general, still that continued enthusiasm from what we saw was, again, a tremendous day yesterday. Again, a lot of this is tied to optimism regarding the war between U.S. and Iran, but no real critical developments that you could point to say that perhaps there is oil, flowing through the Strait of Hormuz or anything like that.
It's interesting to see for all these wild swings. They seem rational to me. I mean, if you think there's even a small chance that that Washington or Tehran are telling the truth, one side says, we're almost there, we got a deal. The other side says, I'm sorry, we're not even talking to these people. But if there's even a small chance that we're close, it does make sense that markets would rally strongly and oil would slide. It's just hard to keep up.
It is really hard to keep up. We're going to take a quick break here on the Financial Exchange. When we come back, we're talking a little bit more about some of the sector performance in what was a really rough quarter for the S&P 500. That's right after this break here on the Financial Exchange.
Stay informed and prepared for market changes and breaking business news. The Financial Exchange is live every day on YouTube. Tune in, subscribe, and keep up to date on all of our show's content on a daily basis. This is the Financial Exchange Radio Network.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Leaving assets to your family may sound simple, but you need the right plan. Cushing & Dolan's new guide is called How to Leave Assets to Beneficiaries. Protect your assets and control your family's inheritance. Call 866-848-5699 and request your free guide today. That's 866-848-5699 or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
Financial Exchange streams live every day on our YouTube page. Subscribe to our page and follow market activity all morning long. Only here on the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and be sure to hit that subscribe button.
Here's what worked during a rough quarter for markets. A piece here from the Wall Street Journal. Surprise, not much worked at all during this quarter. Spoiler alert, really only the energy sector, as many of you can imagine, as you fill up at your local pump. That was the only real area that was a bright spot for equity markets in Q1 of this year. We had the energy sector upwards of 35% in the first quarter of the year. And what was interesting that I have been continually focused on in just the sector breakdown in general, there's 11 sectors of the S&P 500, which is the benchmark that we most commonly fall in, and many other investors too, in terms of how the U.S. stock market is performing in a given year. And one of the areas that I focus on a lot when talking with clients, Mark, is that it is important to have that diversification across different sectors, because if you study the sector performances year over year, you can fall guilty into a pattern of just saying, well, why don't I just have all my money in tech? Because tech has just, kicked butt for the last, decade off and on. And, the last 3 years are no exception to that, where tech was really the fulcrum of growth that we saw from equity markets. But year to date, it's off about 9%, one of the weaker performing sectors. Consumer discretionary, also an area that has shown some weakness as well. It has been staples, which would be companies like Procter & Gamble, Colgate-Palmolive, for example. The staples that have fared far better. Energy markets and energy companies have fared well too. And materials. Those have been the three areas that have hung up pretty well from a performance perspective, but many of the others that I mentioned, though those are fewer in number, perhaps, like they're the information technology and communication services, that's only 2 of the 11, but they are the most important 2 of the 11, and financials would be the third one. Those 3, from a weighting perspective, are really significant in terms of their impact. When you're watching the S&P on a daily basis, the tech sector, the financials, and consumer discretionary, you get up to close to 50% of the weighting of the market in general. So looking forward in terms of the sector rotation, it does seem like investors are focusing in times of volatility. There tends to be a little bit of piling into more value-focused companies. That tends to land into companies that might be consumer staples or utilities, et cetera. And so that really is the backdrop of where we sit from a market perspective. There has been some individual stocks that have benefited from some of these market movements. CF Industries in particular, they are a producer of nitrogen fertilizer that is a U.S. domestic company. They use natural gas to produce that nitrogen fertilizer. We've seen nat gas prices in Europe rise upwards of 60%, where nat gas increases domestically here in the U.S. have been far more moderate in comparison to that. So that has been a stock that has benefited. And some other companies that are in sort of that agricultural fertilizer space that are domestic, a little bit more immune to some of the overall global supply shocks. So it's been an interesting quarter year to date, and sort of re-emphasizing that the energy sector can be really a bust sector over many years, but it's important to have that diversification.
Yeah, you brought up tech, and I giggled like an idiot, but because it's not an unreasonable thing for somebody to say, well, why not just invest in the highest growth sector? And tech is. It's had the highest growth by any measure, and it's also got the highest prospective growth. That doesn't mean things are going to pan out for it. Just, that's the way investors are pricing those stocks today. And that leads to the key point that, well, it's priced accordingly. So the tech sector is worth about $25 trillion. That's nearly as much as the economy. Wow. GDP is about 30. Remember the old Buffett rule: when the stock market gets as big as or bigger than the economy, investors might be getting ahead of themselves.
Yep.
Well, now tech is as big as the
ship
whole
has
economy.
sailed.
So, and when I say as big, I'm talking about market capitalization. Market cap of the S&P 500. This cannot. I'm pulling data from Morningstar here. It can't be right. I want to say something like 70 trillion. This has it at 115 trillion. Maybe I just haven't checked in a while. But to your point, tech is far and away the biggest sector. It's also the most richly priced.
Yep.
So if those expectations, all these technologies could pan out. AI could be revolutionary and life-changing, disruptive in a good and a bad way, etc. But a lot of that could already be priced in, so to speak. So you want to look for undervalued, ideally, I'll just say investments. And one way to do that without having to think too much about it is just to buy an index fund that is comprised of all the 11 sectors that you talk. Well, you didn't talk about every one, but you talked about many of them.
The other areas that have performed well year to date, of course, the defense sector has seen a tremendous ride over the course of the last 12 months or so, a 60% increase for companies that fall under that umbrella of the defense sector. A lot of the domestic ones you can think of off the top of your head, the Northrop Grumman's, the Lockheed Martins, etc., those stocks have seen their valuations increase pretty substantially.
It's funny if you think about it. I assume the theme there, the story there is, well, we're going to be spending more on defense. The rest of the world will too. There may be more conflicts or something, and the defense industry will benefit. How does that jibe with the idea of expecting high growth from if there will be more conflict and we need to spend more on guns and therefore there's less to spend on butter? You can't have a high growth world that is at the same time spending a lot more on defense. The high growth world of the last several decades was a result of American military dominance enforcing sort of rules of the game on everybody, imposing and enforcing, I think for the better, but honest people could disagree, rules of the game. That's all breaking down. Free trade is broken down.
Right.
NATO's about to fall apart. What does that mean for growth? It means more conflict, probably, and higher spending on defense. You can't have both that and higher and the same growth rates that we were able to achieve in a more orderly world.
When you mean the supply chain sort of being
there's that
not
there's
as
free trade
accessible,
down,
free trade,
the flows of goods and people becoming more constricted, all of that. You may like it, by the way. You may say, "I am America first. I don't care. We've got a vast country." We're more than adequately endowed with natural resources. We don't need others to play with. We're coming up against the break. Maybe something we can talk about later.
We're going to take a quick break here on the Finished Exchange. When we come back, we'll have a full market update with Wall Street Watch and the weekly segment with Todd Lutzke from Cushie & Dolan. Ask Todd right after this break.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have
each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, how can you ensure that your kids' inheritance can be protected from future divorces?
Well, estate planning, as you know, does things like avoid probate, protect assets from nursing homes, and reduce taxes. But you know what? The family behind the estate plan can be more important. And so the trusts live on after you die, and you can have language in there that divides the assets to the children, but doesn't just pay it out, right? It holds it in trust for them and allows them to be trustee, but just not take it. In order to get it, they have an independent trustee that can say yes or no. And that way, by not owning the asset, if they get divorced down the line after you're dead, and the other side says, hey, I want half of what's in that trust, you're going to say, that's great, but you have to ask the independent trustee. So it's now not going to be available to you. And more than just the ability to say no, it's the fact that you don't own it. So if you don't own it, it's not a marital asset to begin with, so it should not be even subject to the divorce. So learning how your trust works after you die can oftentimes be more important than when you're living, and it does more for you after you die than when you're living sometimes.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets are extending their gains from yesterday's strong relief rally, driven by optimism. The conflict in Iran is nearing a conclusion. This morning, President Trump posted the U.S. will consider a ceasefire when the Strait of Hormuz is open. Wall Street's also sifting through some fresh economic data points this morning, including slightly better than expected retail sales for the month of February. Right now, the Dow is up 0.2%, S&P 500 up by a similar measure. NASDAQ up over 1% higher. Russell 2000 up about 1%. 10-year Treasury yield flat at 4.317%. And oil pulling back nearly 3%, trading around $98 a barrel. Nike plunging 14% after the athletic apparel and sneaker maker warned of sales declines ahead, saying its turnaround efforts will continue to affect results this year. Bloomberg reported that CEO Elliott Hill turned to staff to air his frustration yesterday at an all-hands meeting. Meanwhile, shares in home furnishing company RH sinking 22% after its full-year revenue growth range missed street forecasts. RH said it was hurt by tariffs and bad weather. Elsewhere, Dave & Buster's said that restaurant and entertainment Dave & Buster's said it expects an increase in same-store sales revenue and EBITDA this year, sending shares rallying 15%. And Intel agreed to pay about $14 billion to buy half a plant in Ireland that it had previously sold to Apollo Global Management. That stock is climbing by 8% on that news. I'm Tucker Silva, and that is Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutzke is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutzke.
It is Wednesday, which means we are joined by Todd Lutzke from Cushing & Dolan to answer any of your questions in the estate planning realm. If you have questions on gifting, estate taxes, or trusts, give our studio line a call at 888-205-2263. Again, any of your questions in the estate planning realm for Todd Lutzke, give our studio line a call at 888-205-2263. Todd, thanks so much for joining us, punctual as usual.
Always a pleasure. Are you making fun of me?
No.
Let me get my microphone set up. You think I wasn't ready?
You're always ready to go, Todd. And a question that I have for you, I'll be the first person here to ask you a question, is on leaving assets to children. In particular, sometimes I bump into with clients concerns about what their children would do upon receiving a significant inheritance. There's concerns that perhaps they might spend it foolishly. There could be some other concerns about addiction and drugs and things of that nature. What are some of the provisions that you can put in to some of your estate planning work that can help buffer against concerns that parents may have on their children inheriting assets from them?
So, a couple of things. When you talk about leaving assets to children, as you said, there's so many different problems you could have with a child, and all of those things could impact the way in which you leave assets to children. So maybe we just run through a couple of examples. Might be the best way to go. I think the first thing people don't think about is how many people actually have a special needs child. Mm-hmm. It's amazing. I can't tell you. I talk about it. I ask families all the time, just to make sure. And when they have special needs children, they oftentimes think that they need to disinherit that child just because they're special needs, and they might be getting governmental benefits. And if they're getting governmental benefits, then they're going to lose their governmental benefits if you leave them assets. So we got to disinherit them. Right. Horrible idea, folks. Mm-hmm. You do not need to do that. In fact, inside your trust, and this applies to whether you have a revocable trust, an irrevocable trust. I don't care if it's a lifetime giving trust, an irrevocable life insurance trust. Remember, when we talk about how to leave assets to children, the type of trust you have when you start it is irrelevant. It is when you die, all the trusts are created equal. So you can do anything you want after you pass. So in this case, inside your trust, you might break it down into 3 buckets if you have 3 kids. If one happens to be special needs, you're just simply going to have special language in that share so that child doesn't own it. If that child doesn't own it, meaning they can enjoy it, I'll explain the language, but if they don't own it, well, then they don't lose their governmental benefits, and they can continue to get that. But we can enhance their life by having a child, such as a sibling, serve as trustee when you're gone to make distributions out of that bucket for that child's benefit, and don't usually need to tie it to any standard. Simply say in the trustee's sole discretion. That way you can help this child have a better life without losing governmental benefits. So easy to do.
A lot of great information there. Really, really appreciate that. We're going to go to the phones here. We've got David from the Cape. You're on with Todd Lutzke.
Hi. Todd, good to talk to you, Todd.
Thank you.
My mother has an irrevocable Medicaid trust. I'm the trustee, and my siblings are beneficiaries. My mother asked me to give some money from the trust to one of my brothers. Is that considered a gift, or is that because he's a beneficiary, it's not a gift as far as the IRS is concerned?
So money in this, if it's an irrevocable Medicaid trust like the ones that I prepare, again, I haven't read this trust, so I don't know, but if it's one that Cushing and Dolan prepares, we would have language in there. Again, the beneficiaries don't own the property yet. They don't own the money. They don't own any of the assets in the trust. The trust owns it. So that's very important. And since it's a grantor trust, or at least ours are, it's still technically taxed for income and perhaps gift tax purposes on your mom's return. Okay? So if you distribute money out, let's say we took $100,000. I'm assuming it's more than 19. If it's less than $19,000, then there's no gift tax, no filing, no requirements to do anything. But if we decide this child needs like $50,000, and you take $50,000 and distribute it out of the trust to the child, again, assuming there's a paragraph in the document, and I'm sure there should be, that allows discretionary distributions to be paid out to the donor's children. So here we distribute out $50,000 to the child. Technically, it's a gift from mom to the child, and then we go forward. But the child doesn't have to file anything. The child doesn't pay any gift tax returns. It's the giver that has to file. So technically, your mom would file a 709 gift tax return. I know, no good deed goes unpunished, right? So the giver files, and the giver would not have to pay any tax in this case because your mom, me, you, everybody has the ability to gift $15 million once in a lifetime without paying a gift tax. So hopefully that answers the question.
We're talking here with Todd Lutzke from Cushing & Dolan. If you have any questions in the estate planning realm on gifting, taxes, trusts, give our studio line a call at 888-205-2263. Again, that's studio line for any of your questions for Todd Lutzke of Cushing & Dolan, 888-205-2263. We're going to take a quick break here, but when we come back, your questions with Todd right after this break.
Ask Todd with Todd Lutzke every Wednesday at 10:30, only here on the Financial Exchange Radio Network. Leaving assets to your family may sound simple, but you need the right plan. Cushing & Dolan's new guide is called How to Leave Assets to Beneficiaries. Protect your assets and control your family's inheritance. Call 866-848-5699 and request your free guide today. That's 866-848-5699 or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
You're listening to Ask Todd with Todd Lutzke on the Financial Exchange Radio Network.
We are back here with Todd Lutzke from Cushing & Dolan. If you have any questions for Todd Lutzke in the estate planning realm regarding trusts or gifting, give our studio line a call at 888-205-2263. Anything, again, questions that you have in the estate planning realm, 888-205-2263. We're going to hit the phones right now. We've got Kevin in Needham. Kevin, you're on with Todd Lutzke.
Yes, hello. First of all, thank you for having the show. I love it.
Thank you.
So I'm trying to find out if there's a way to gift stock that's highly appreciated. Say, like if you bought Apple 15 years ago, and now it's mostly profit, but you don't want to have to take the profit to give the money away. Is there a way to do that? Let's say if you wanted to give it to a grandchild or...
Well, there is, but I'm not sure you're saving anything, and that's the problem, right? So, one, you are allowed to make a gift of anything you want, including highly appreciated stock. You don't have to sell it. So you can gift the shares in kind to your grandchild. I mean, you might have to set up some kind of an account. I don't think your grandchild, unless they're old enough, can have an account. But let's say they're over 18. You can set up an account, or he can or she can, and you just transfer the stock over there. So let's just say, for example, that you have, 500, I don't know, should we use a number just to make an example? So let's say you've got $1 million of Apple stock, but let's say you bought it long time ago, and let's say you only paid $100,000 for it. So your gain built into that stock is $900,000. That's kind of what you're driving at, right? You got this built-in gain. So they call it built-in gain. And if you gift this away, you are making a taxable gift. Forget the $19,000 present interest exclusion amount. I'm just going to ignore that for now. You're making a taxable gift. You are, because you're the giver. You're making a taxable gift of $1 million. And the recipient doesn't have to have any income tax from that gift, and the recipient doesn't have to pay a gift tax. But the giver does. So now you get to file a gift tax return, a Form 709, and you get to file it and say, I've made $1 million taxable gift. However, there's a deduction line on the 709 gift tax return, and that deduction line says I get to use up $1 million of my $15 million once-in-a-lifetime gift tax exclusion that everybody has. Okay, so $1 million minus my $1 million exemption, you pay zero tax. But now you only have the ability to shelter $14 million of other assets from federal estate tax purposes. Now, I don't know you, and you're probably saying, well, that's great. That's not a problem for me. Not going to be an issue. And you're probably right. But what have you really accomplished? You've now given your grandchild a $900,000 built-in gain. So when your grandchild sells it, that capital gain is still going to be taxed at 28.8% federal, state, plus if you're in MASH, you get the bonus of that 4% millionaire's tax on top of that. So I'm not sure we really saved anything. So depending on your estate, you might want to just do an estate plan where we can also pay no estate tax when you die at the death tax level and allow your grandchild to inherit it when you die. If that's the case, we save on the estate tax front. We don't pay any federal or state death tax depending on the size of your estate. And when your grandchild gets it, let's say then it's worth $1.5 million, that grandchild's basis will be $1.5 million. Now the grandchild can liquidate the Apple stock and pay zero capital gains tax. So you're saving, on $900,000. If you hit that at 30%, right, that's $270,000 in capital gains tax, right? So just saying there's a lot to be done there. So I would not just jump at the idea of making a gift is my point. Do some planning. Anyways, folks, hope that helps. But, some of the things we think about, and this is a great question from Kevin because it's how do you leave your assets to your family, which is exactly what the new guide is this month, folks. How do you leave your assets to your family? Not so much worried about the estate tax and the probate, but I care about the family behind the estate plan. What if I wanted to go to a grandchild like Kevin does? What if I want to do generation skipping planning where I can have children and grandchildren enjoy the assets but not have it taxed at every generation? What if I want to protect assets from future creditors, divorces? What if I have a child who's got spendthrift problems, or I've got a special needs child and I want to care for that child? There's so many ways to think about it. And the last kicker, what if you got a second marriage? Oh my goodness, we really got to figure out how to leave assets. Folks, get the guide. How do you leave assets to your beneficiaries? Brand new for the month, packed with information. 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com.
Todd, what are some of the pros and cons? I think oftentimes I'll talk with clients and they may have been added on as a co-owner on a bank account for an elderly parent, and there are some pros to that from an ease of use perspective, I would imagine. But what are some pros and cons to that approach? Because there also can be some negative effects that can come from adding a kid on as a co-owner on assets.
So let's say a joint bank account maybe, or a joint brokerage account,
right?
Something like that. And again, I think that's critical. And again, this guide actually has that in there too. It talks about the easy way out. And this is what this is, Paul. The easy way out is joint account, or maybe even add a designated beneficiary on the account. So if you put a designated beneficiary on an account to a child or a joint account to one child, why? Oh, because they're local, because they're convenient. It's convenient to help out paying a bill, accessing an account, etc. You do that, and if you die, it goes to that person and avoids probate. But if I've got 3 other kids, I accidentally disinherited all those other kids. Why? Because I listed one child as the designated beneficiary. So I think you need to be mindful of that. Now, to fix that, if you still want to have it, I guess you have that with a designated beneficiary, but you have the same problem with a joint account. Now, with a joint account, you might run around and put, again, one child on as a joint owner. when you die, the surviving joint owner automatically gets the asset. Yeah, it avoids probate, doesn't do much from an estate planning standpoint at all. And again, you run the risk of disinheriting other children. If that's what you're doing, at least make sure in your will that there's language that says, I'm going to disregard the joint ownership and have it go to probate anyway, so that the will would grab it and pour it over into your trust. So you'd have a pour over will, a connection there to say, now I've prevented the accidental disinheritance of my children, but at least during life there was the convenience of accessing the account and paying a bill. So I think it's very important to learn how better to leave your assets to your children or your family than a joint bank account or a designated beneficiary. I don't want either of those. I think
with Todd Lutz at around $99 a barrel, Brent crude still sits over 100 at 101 a barrel. That's all the time that we have for the first hour of the Financial Exchange here, but we'll be right back at it with much more to cover right after this break. Stick with us.
When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free, solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
One of the most helpful things you can do for your family is to make sure that important information about your life is organized and easy to find. Hi, this is Chuck Zada from the Armstrong Advisory Group. Financial accounts, legal documents, and insurance policies are all part of a complete financial picture. When that information is scattered in different places, it can be difficult for loved ones to step in and help if a crisis occurs. Our new guide, called Building Your Emergency Financial Binder, will show you how to organize the most important details of your financial life, including key contacts, retirement plans, investment accounts, and insurance information. Call 800-393-4001 and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request the guide by visiting ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Our Senators Edward Markey and Elizabeth Warren and Representative William Keating are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Sometimes we know what's next. Other times, it's impossible to know. life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, why can't you just add your kids to your accounts or to your house deed?
Well, you can. It's just not a good idea. So people who do that understand with an account, right, you can put a joint name on the account. Now, that doesn't actually complete the gift because you actually have to take the money out and then the gift is complete. But when you set it up, yeah, the asset would avoid probate. But if something happens to the child, it's going to be, available. Half the asset would be subject to the children's creditor. So you don't want that. And secondly, if you only put one kid on the deed, you've likely disinherited the other kids. So it's not really good planning overall. Whereas if you put the house in the kid's name, now you've actually made a completed gift of half the house and would need to file a gift tax return, number one. Number two, of course, it's exposed to the child's creditors and, yes, divorces. You could find yourself at some point owning half your house with an ex-in-law. Not sure that's a good way to plan. So please, put together trusts. Don't just throw names on deeds or on bank accounts because, as I always like to say, nothing good comes from giving assets away while you're living.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated.
This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Markets continue their momentum from yesterday's significant rally that we had, with the S&P 500 up close to a full percent, the Dow Jones up just a shy of 400 points, and the NASDAQ rallying 1.5%. Paul Lane, Marc Fandetti, and Tucker Silva here with you as we kick off the program. Just continued enthusiasm in markets. We had markets rallying upwards of close to 3% yesterday on the S&P 500. We had the NASDAQ tech sector up even more than that, and the Dow Jones was up pretty significantly as well. This was all on the backs of optimism regarding the potential war ending between Iran and the U.S. We've had more recent updates stating that President Trump had mentioned that on Wednesday, today, again, so hard to keep all this together, that Iran's president had asked the U.S. for a ceasefire, and that the U.S. will consider the ceasefire offer if the Strait of Hormuz is open, free, and clear. But then we have some pushback from Tehran stating that it had not requested a ceasefire. Regardless, from all that back and forth, markets are up on that optimism on what was a pretty poor Q1 for the markets that closed out yesterday, but these last 2 days have provided some momentum for stocks. And as we head into the second quarter here, we're going to take the start of the program to just talk about where the economy sits, Mark, at this point in time. And in particular, there's this piece here in the Wall Street Journal which outlines what are the potential concerns for the economy going forward, or what are some things that could actually help it pull through. The Wall Street Journal's piece is stating that the economy is on edge right now, and I think that's a fair characterization. We have this situation that is leading to a huge surge in energy prices. There's ripple effects that spread all throughout the commodity market and just are going to put a significant amount of upward pricing pressure on all sorts of material goods that go beyond just the energy market, that gets a lot of focus from us and others out on a daily basis when you look at the pump and cost of diesel and other things of that nature. But heading into Q2, one of the big risks, of course, is that this, and the most paramount significant one that we should highlight first, is that this conflict goes on longer than anticipated. It seems like every single day we get some sort of messaging that there's hopes to wrap this up sooner, but we'll believe it when we see it, right? When the Strait of Hormuz opens up, that is truly going to be the indicator that we have made significant progress. If this conflict continues to go on for another 2 weeks, 4 weeks, 6 weeks, the further you play this out, it becomes almost inevitable that we are going to hit some sort of recession from the impacts of having basically 1/5 of global trade being completely shut off and not being able to go through this Strait of Hormuz. So that is the first one, and I don't think we need to delve into that much more. It's pretty straightforward to understand that if this continues on, that is the biggest economic
I'm
risk.
done trying to figure out where these
it's too hard to
discussions
pontificate
are,
on
who's telling the truth. I'll just say it's really bizarre. I've never heard or read about anything like this in the modern era.
It's hard.
U.S. president's word versus Tehran, and people don't know who to believe. It's
moving,
just a strange place to be.
It's moving so quick.
Okay,
so that one we can just shelve to the side. It's not good.
No, it certainly isn't. But that's a geopolitical sort of angle. There have been 12 recessions in the post-war period, 1947 to today. One of those was totally predictable, the COVID recession.
Yeah.
We decided to shut the economy down. The rest, so the 11 more sort of normal business cycles, nearly everyone except one, was preceded by a run-up in the price of oil.
Mm-hmm.
Now, some of that run-up was due to demand growing quickly, the economy running too hot, and the Fed having to effectively kill the expansion to get inflation under control. This is a typical business cycle. Demand starts to pick up in the trough of the prior recession. It grows, the economy expands. I'll just use demand and the expanding and the economy expanding sort of synonymously here. Then the Fed has to cool demand because it's overstimulated the economy. There are natural forces that keep the economy growing, namely you and me needing to sort of go to work and just natural impulses. And in the modern era, for the past couple hundred years, economies have tended to grow. It wasn't always the case. There was no economic growth for a long, long time, up until basically the discovery of fossil fuels and industrial revolution and all that. Sorry, I'm going really broad here, I guess. So, the economy continues to grow until something slams up against it and stops the growth. Oil price shocks have been, in the post-war era, a source of a counterforce.
Right.
Will they be that again? Well, we're less oil import dependent than we used to be. There are a lot of winners associated with the spike in oil prices. Question is, will their spending, their additional spending, their marginal spending make up for the spending that consumers aren't doing on other stuff because we're spending more on energy goods and services, including gasoline? Can't answer that right now.
Right.
I don't think you get to recession where oil prices are today. It's very hard to, using the statistical relationship between oil prices and economic growth, firmly conclude that this is going to, what we've experienced so far is going to cause recession. But to your point, we don't know how long it's going to go on, and we don't know how much farther, if at all, oil prices will rise. Politicians are desperate to keep oil prices under control.
Right.
So they're jawboning. Pieces around, we've had statements to the effect of the war is just about done, like 13 times now, counting last night, in the past 4 weeks.
Right.
And that's okay, by the way. Jawboning's okay. It's a legitimate tool for policymakers to use. Which brings us back to where we started this conversation, where I don't know who to believe or where this thing is right now. I do know that we're desperate, we're eager, I should say, to end the war.
Yep.
But I don't know how close that prospect actually is.
The longer the energy price shocks are in the system, then the less discretionary spending dollars are out there, just to simplify for listeners out there, for a U.S. consumer, particularly on the lower income side of things. The more of their monthly budget that has to go to fuel costs, the less there is to spend.
Yeah, you can model it as a tax
elsewhere.
increase or a tariff increase.
Exactly.
They're all sort of, they suck money away from other stuff.
Some other areas of economic concern that we were more focused on heading into this year, before this really took center stage, the conflict that we were just discussing between the U.S. and Iran, was artificial intelligence and the data center build out. The companies of the likes of Google, Amazon, Meta, Microsoft, and Oracle were committed to spending, there's multiple different estimates, $2 trillion over the course of the next 3 years on data center and chips. That was one that was quoted by Morgan Stanley as a projection. If you look at the next 12 months or this year of 2026, anywhere from $500 to $600 billion spent out for data centers and infrastructure costs. That was something that is an area that you could point to say that, hey, these companies that I just mentioned are a very significant weighting in the stock market. The Magnificent Seven that are talked about so frequently hold close to a 30% weighting of the overall S&P 500 just due to their size. They're now flipping their business models to a degree, not all of them, but broadly speaking, of previously running at a high gross margin business with significant R&D expenses, but nowhere near the levels that we're seeing today, to a more sort of pick and shovel sort of approach today, where there are billions of dollars being spent on infrastructure, and that is propelling a lot of the economic growth that we've seen over the course of last year. And as you mentioned, it was a more tepid year in terms of economic growth, but the reason that we did have that economic growth was from a lot of this investment. And so any dent to that overall sentiment or concerns regarding the advancement of that technology, that was something that was an area of concern heading into this year. And then the third one being the labor market too. But your response on that?
Well, would it come from elsewhere? You can't say, and I'm not saying you're saying this. We talk about this a lot. Like partial. I'm not even going to give this the stupid technical term for it. It's called partial equilibrium thinking. You could just call it partial.
Couldn't resist.
Partial. I can't because there's so much of it out there, and it's so wrong. You can't assume one thing changes and nothing else in the economy does.
Mm-hmm.
It's like, so if that data center investment hadn't taken place, those dollars would have gone elsewhere, and we would have expanded, biotech or so we would have put more into infrastructure. It's not like the economy wouldn't have grown. It's that the composition of the growth would have been different.
Mm-hmm.
So, yes, it is true in an accounting sense that all the growth came from data center. That's I'm even overstating it, but let's just suppose it is in an accounting sense. Don't assume that if that hadn't been there would have been no other source of growth. The economy would just look different today. So that's sort of my response to that.
The labor market was another area that was of concern heading into this year. There was very minimal job additions through 2025. The unemployment rate had ticked up to about 4.4% off of its trough of about 3.5% when the labor market was at sort of its peak in terms of where we had a significantly low level of unemployment. Still, 4.4% is a very historical low number. But again, all of these concerns have taken sort of a backseat in terms of what the biggest focus is for the rest of this year. It seems as if markets at the moment are optimistic that perhaps we could get a resolution to the most significant conflict that we're dealing with from an economic perspective at the moment, with the S&P and the Dow Jones up close to a full percent. We're going to take a quick break here on the Financial Exchange. When we come back, we're going to be playing a little bit of trivia as well as a check-in on the mess that is private credit right after this break here on the Financial Exchange.
Stay connected between shows. Follow the Financial Exchange on Instagram for daily clips on business news from New England and around the country. This is the Financial Exchange. When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Get real-time financial insight as news breaks. The Financial Exchange is live on X. Watch the show and follow us for the most up-to-date business news you need to know. This is the Financial Exchange.
Time for trivia here on the Financial Exchange. And on this day in 2024, Florida's population reached 23 million. Making it the third most populous state in the U.S. So our trivia question today, what is the least populated state in the U.S.? Once again, what is the least populated state in the U.S.? Be the sixth person today to text us at 617-362-1385 with the correct answer. Along with the keyword trivia, you win a Financial Exchange Show t-shirt. Once again, the sixth correct response to text us to the number 617-362-1385 with the correct answer. Along with the keyword trivia, we'll win that t-shirt. See complete contest rules at financialexchangeshow.com.
Coming back from break here, just want to address something that came through on the text line just moments ago. A listener concern regarding our previous discussion on the Strait of Hormuz and the economic impacts to the U.S. So the texter here stated, what percentage of oil does the United States receive or transit through the Strait of Hormuz? If this war continues, say for 6 months, how will the U.S. economy be affected? Since we are a net exporter of oil and natural gas, would that not be a thorough system of supply and demand and make us more profitable? So I'll tackle some of this first, and Mark, you can jump in too. We truly are a global economy. Yes, that is accurate that we are a net exporter of oil and natural gas, but that net exportation is not going to be enough, presumably, to make up for the fact that consumer spending would drop relatively significantly if we were to persist on these oil prices for another 3 to 6 months, or let's say 6 months, because that's the time frame that he had used. There also is the inflationary impacts to a lot of items, whether it be helium, fertilizers, things that are abundant in all sorts of manufacturing that would have a trickle-down impact to consumers on the inflationary front. So, yes, we're talking about you're paying more at the pump.
Sure.
$4.10 a gallon, I think, is the AAA national average. But prices on many different items, if this war were to persist longer, will go up. Not just oil and gas. We will see it in electronics equipment because of the cost of semiconductors would go up. We've seen it already on the fertilizer front for agricultural products. That means cost of food would go up. So it's all of that, all encompassing the Strait of Hormuz and the impact to global trade. That would be the negative impacts to the U.S. because of the sourcing of all those different items that I mentioned is just not strictly the U.S., whether it's agricultural products, whether it's electronic components. It truly is a global economy. The pricing pressure on all those items, broadly speaking in the globe, would outweigh any benefit that we would receive being a net exporter of oil and natural gas.
Yeah, I think the point here is, well, if we don't buy any of the oil that transits the strait, why should we care?
Mm-hmm.
And I'd put it to you this way. And thanks for the text, by the way. It's a great question. You hear this a lot from certain corners, this line of argument. If the supermarket in the town next to you burnt down, or maybe had to close for the day, you think it would affect you if you had to do shopping? The answer is absolutely. They'd all come to your supermarket. And if prices were very flexible, that's not how it works in the real world, but the prices you pay would go up. there's a broader market than the market in your hometown for the goods and things that you buy at a supermarket. So my point is, oil's a global good. Now, maybe the point the texter's trying to make is, well, we produce a lot of oil too, so it's good for domestic producers. It is, but to your point, metals, chemicals, fertilizers, a type of chemical fertilizers, and many other goods transit the strait. It is a global choke point.
Right. And what we've learned from COVID and post-COVID is that it's a global supply chain, for all of these items outside of just oil and gas that we focus on most frequently, whether it's rare earth minerals or all these different areas of the economy come from different places, and any impact on global trade, even in a strait that we probably hadn't spoken about at all 5 or 6 weeks ago, has significant importance.
Moreover, why would the president be so eager to reopen the strait? If this opinion, and I think I know where this opinion comes from, certain quarters of the certain part of the political spectrum, the president really wants the strait open, and we've shown Iran how to hold the world hostage over the past 4 weeks. Now we have to kind of fix that.
We're going to shift gears a little bit on the private credit mess that we've been dealing with on the financial front. This has been an area that has been an area of concern for the financial sector in general, but it is something that is probably not impacting more significantly some of the larger banks like JP Morgan and Goldman Sachs. They do have exposure to private credit, but not nearly the levels that we saw with the subprime mortgage crisis back in 2008. However, there still are potential losses that loom out there. We've seen $13 billion yanked out of private credit funds in the first quarter of this year. It had been a tremendous area of growth where you had seen major banks sort of backing away from lending to sort of middle market companies. And as a result, you had a lot of private equity firms and others building out these private credit funds to provide lending to people in sort of that middle market range and just do all sorts of financing. And we've seen significant redemption requests as there's been concerns. There's been a couple different issues that have arisen from companies like Tricolor and others that were relatively unheard of, but have created a significant sort of pressure on the private credit space in general. And there's concern that this could be a broader spread issue. Right now, we've seen about a 5.8% private credit default rate through January, according to a Fitch ratings report. To be clear, that is not necessarily pure defaults, but it encompasses maturity extensions and payments in kind, which just do point to some sort of financial stress. And so the structure of these private credit funds, you can only typically redeem 5% of the fund on a given quarter. So there's a little stress that is in that market because you do have a lot of retail investors that are kind of pushing for the exits. We're going to take a quick break here on the Financial Exchange, but when we come back, we're going to have the answer to our trivia question and Wall Street Watch right after this break.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Building Your Emergency Financial Binder. Mike, when we talk about the type of information that should be in there, what kinds of things should people be including so that a loved one or family member can help to keep their finances in order?
Yeah, I think, on the financial side, it's what do I have and where is it?
And how do I get access to it?
Right, and so that can mean getting access to online passwords and things along those lines, but obviously how you share this stuff is extremely sensitive given the threat to being breached down the road. And so mainly it is, though, what is the snapshot of my financial, health, and legal life, and how do I format it in a way that people can actually interpret it?
And I think another piece there is that is also always changing. How do I let people know what changes I've made and when I've made updates to it, because I might not have the same accounts that I used to?
Right, and the guide does lay that out of, hey, how do I document changes in here, because you might not always have that old account at said financial institution. It could change, it could shift, you might retire, and keeping this thing up to date is critical. Obviously, the more stuff there is out there, the more complicated this becomes, and so as much of it as you can check off the list while you're still around and able to explain it is extremely helpful.
The guide, again, is titled Building Your Emergency Financial Binder, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. That phone number, again, is 800-393-4001, or visit armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are extending their gains from yesterday's significant rally driven by optimism. The conflict in Iran is nearing a conclusion. This morning, President Trump posted the U.S. will consider a ceasefire when the Strait of Hormuz is open. Right now, the Dow is up over 0.8%. S&P 500 up over 0.9%, or 60 points higher. NASDAQ up 1.4%. Russell 2000 up over 1.5%. 10-year Treasury yield flat at 4.305%, and oil down about 1.5%, trading right around $99 a barrel. Some breaking news from Eli Lilly moments ago after the company announced the FDA approved Eli Lilly's GLP-1 pill. Eli Lilly shares rallying over 4% on that news. Meanwhile, Nike stock plunging 14% after the athletic apparel and sneaker maker warned of sales declines ahead, saying its turnaround efforts will continue to affect the results this year. Bloomberg reported that CEO Elliott Hill turned to the staff to air his frustration yesterday at an all-hands meeting. Elsewhere, shares in home furnishing company RH sinking 23% after its full-year revenue growth range missed street forecasts. RH said it was hurt by tariffs and bad weather. And Intel agreed to pay about $14 billion to buy half a plant in Ireland that it had previously sold to Apollo Global Management. Intel shares are rallying 9%. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: what is the least populated state in the U.S.? That would be Wyoming. Casey in Derry, New Hampshire is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Casey. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
One other bit of breaking news here. SpaceX has filed confidentially for its IPO, according to people familiar with the matter. That would bring potentially the biggest ever listing, with valuations on the IPO, anticipated to be anywhere from 1.5 to 1.75 trillion. So we'll continue to keep you apprised of what will be a very highly anticipated IPO. But want to get back to what we were talking about in the segment before. I sort of set the table on private credit, and it's become a growing area of concern for financial markets. This is an area that a lot of big banks, not necessarily were they directly participating in the lending, but they were providing funding for lending within the private credit space. And as a result of issues that have gone on over the last 6 to 12 months, it has gotten a lot of scrutiny from any retail investors who might have been investing in the space. The private credit space in general has ballooned over the last decade to swell to about $2 trillion in assets. And I had mentioned before some of the requests, the heavy requests for redemptions that are sort of hurting companies like Apollo and others that participate in this private equity credit space. But Mark, your thoughts on just what this could mean if we were to see further unraveling on the private credit space?
I've struggled with how you draw the line from, I'll call them troubles in private credit, and some of them are normal. There's such a thing as a credit cycle, and defaults tend to pick up toward the end of it because underwriting standards get more lenient. Loans are made that shouldn't be made, stuff like that. We're all sort of familiar with this idea of a credit cycle, and it's going to affect private credit too. I was formerly, I think, of the view that, well, it'll probably be contained, dangerous word to use, but it should be contained. These are sophisticated institutional investors. But this article, at least for me, draws a line between what's happening in that sort of niche little ecosystem and what could happen in the broader economy. It explains how the risk could actually be systemic, and it's via the banks. J.P. Morgan, Wells Fargo, Bank of America, they've all made tens of billions of dollars in loans to private credit companies that in turn make loans to borrowers or private equity, say managers who want to buy a company with using leverage, using debt. So if problems in private credit are much bigger than has so far been disclosed or discovered, you've got all these institutions that are ultimately backed by these are all too big to fail institutions for the most part.
We've seen that.
So if a crisis in private credit hits at the same time as a challenging economic environment, and throw a couple of other shocks in there, bank capital could become impaired is too strong a word. I'll just use it sort of casually. It could jeopardize bank capital.
Yeah, from estimates out there, it does seem like it is more contained, but like you mentioned, you always got to be careful using that terminology. What I do hope perhaps comes out of this is perhaps a little bit more transparency on the sector in general. It was sort of known for its opaqueness, where there just wasn't. It's private credit.
Well, that's the only reason you'd use it as an investor.
It's really, there's not as much available information about it. But Apollo has mentioned this idea of perhaps reporting a monthly net asset value that would come out of this, where usually you have with these loans very little information on pricing and sort of where they stand. So it'll be interesting to see sort of how that plays out over the course of the next 6 to 12 months or so. Mortgage rates are marching higher. They've reached a 7-month high of 6.57% for a 30-year fixed mortgage. That was for the week that ended in March 27th, according to Mortgage Bankers Association. We're heading into the pivotal spring housing market, and unfortunately, like I just mentioned, interest rates will be higher on those 30-year fixed mortgages. They've increased about 0.5% over the course of the last 4 weeks or so. That's the biggest advance since 2024. Housing price gains have been relatively muted. Over last year, we saw a 1.4% national increase on home prices. It's supposed to sort of fall within that 0 to 2% range again this year on home prices. There will be a lot more inventory, it appears, on the market, but the question will be, what sort of transaction volume do we see with higher rates sitting at this 6.6%? Certainly not going to be a catalyst to have more home buyers out there. I think there are fair arguments to be made that even that 5.9% that we sort of sat on as the low, maybe that wouldn't have been a huge trigger to spur a lot of housing activity either.
Yeah, so rates going up, all else equal, should push prices down because they dampen demand.
Right.
Coupled with the uncertainty about the duration of the conflict in the Middle East and its impact on inflation, we haven't seen evidence that consumer psychology or sentiment has been severely dented, but the longer people are paying $4 a gallon, it's just such a powerful,
psychological force. Yeah.
Yeah, it really is. It's just, it's another source of uncertainty associated with this kind of open-ended, fluid situation.
We'll see if the spring housing market can turn things around. We're going to take a quick break here on the Financial Exchange. When we come back, a little bit of Stack Roulette right after this break.
Daily financial content in your feed when you want it. Follow the Financial Exchange on Instagram. This is the Financial Exchange.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Leaving assets to your family may sound simple, but you need the right plan. Cushing & Dolan's new guide is called How to Leave Assets to Beneficiaries. Protect your assets and control your family's inheritance. Call 866-848-5699 and request your free guide today. That's 866-848-5699 or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. Planning is well underway for the 2026 DAV 5K. The event sold out in record time last year, so head to dav5k.boston for all the information about how you can participate this November or make a donation to support our great American heroes. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
Time for a little bit of Stack Roulette. I will let the always uplifting Marc Fandetti bat lead off with some kitschy, funny story I'm sure you've got for us with squirrels.
Straight to the funny
Squirrels
bone.
water skiing or something zany that you've got over there.
Yeah, real bonbon of an anecdote. I want to talk about crude oil futures, if I may, because they tell you... Well,
that's topical.
This is the Financial Exchange. What am I supposed to talk about? God, this is the only part of my personality that's even somewhat relevant to. Okay, sorry, I'm limited. They tell if you we spend a lot of time talking about the spot price of oil because that's highly correlated with gas prices, and we know that oil is now back down below $100. I think this morning.
Yep.
Okay, a barrel. You can get a good sense for when investors think the situation overall, and there's a lot of disruption baked into the cake, even if Iran folds or we fold or some combination of those two things. Even if that happens today, the disruption will linger. When do traders think things will return to normal? And the answer is, well, I don't know if this is uplifting. About a year from now.
Next April,
if you look at the oil if you look at oil futures, and the standard is, for answering that question, the standard is, well, when do markets think the price of oil will get back to before the conflict in the Middle East started on February 28th, I think it was, and the answer is next March. Now you could say, well, that's oil futures, that's a price, it changes and so forth, but that's sort of everybody's best guess, from foremost experts to others that dabble So it's one way to think about how long it'll take for this to normalize, Paul.
Yeah, hopefully a heck of a lot sooner than that. But to further, those futures can change very, very rapidly, of course.
Yeah, they are volatile.
They would look far different if this conflict was resolved, I would imagine, if it does wrap up.
But markets think, if you look at movements in equity markets today, people seem to be increasing the weight they attach to the view that military hostilities will end sooner rather than later. So everybody knows that, yet still the disruptions are so baked into the case. Well, it's going to take time to get everything back online,
which is true. Yeah.
I guess.
I want to cover a little bit about some shoe companies here. Tucker had talked about before in Wall Street Watch, Nike had come out with a really poor quarter. That stock has just struggled tremendously over the course of the last year or so. They were down as much as the lowest level since 2015, and the stock is off 30% year to date. The company has been undergoing a total strategic shift where Elliott Hill, who is someone who had worked at the company for a number of years, was taking over for, I believe it was John Donahoe that he took over for. But previously the strategy was to focus much more on a D2C, a direct-to-consumer approach where you and I would just buy Nike shoes directly from Nike rather than working through their wholesalers like Foot Locker and Dick's Sporting Goods and others. And there was a lot of emphasis on these rare exclusive shoe releases. There was a lot of inventory pumped into that. And the two problems that they ran into is that on the direct-to-consumer level, it just they weren't able to make enough inroads there. And there had to be a strategic pivot where they had to go kind of back hand in hand to those wholesaler partners like a Foot Locker, like a Dick's Sporting Goods, and say, we actually need to partner up with you in order to push more of our inventory out. And then you also had them just really completely diluting the rare sneaker market with just too many releases. And now they're in the midst of this turnaround where they're kind of to get things back on track and to try and innovate and come out with new products, because that really lagged during the previous executive, chairman leadership. It had really lagged during that period of time. But this turnaround plan is just taking longer, way longer than anticipated. They saw a pretty precipitous drop in China, and they've just seen a decline in revenue in this current quarter that will be anywhere from 2 to 5%. So the stock is resetting. It just points to how challenging the apparel business can be. Nike had been on such a tremendous run, but they've really struggled since then.
Is the consensus thinking that people prefer to buy something like sneakers in person? Sight unseen doesn't really work.
I was surprised.
Because it's so personal.
I was surprised by the notion, but yes, I think that is a bit of the takeaway
you want to
from
try
the
it
strategic
on,
pivot.
Yeah.
I have been, obviously, unlike my kids who continue to have new shoes every 6 months because they're growing so much. I've had the same size shoe for a long period of time. So I have not taken that approach personally, where I just sort of order them, delivery, and just wear them, work them in that way. If you're a serious runner, I can understand the idea of wanting to try on your running shoes and get a feel for how they fit. But for me, everyday sort of weekend shoes or basketball shoes, I've always just taken the approach of like, hey, just send it to me. But I don't know. Do you guys differ on an approach? Do you go on try sneakers, Tucker?
I mean, I've done both. I've gone on to try running sneakers, and it was a different style, like the big cushiony type of feel. But I've also ordered several pairs of shoes online. I just get it shipped to me. I'm like, okay, this fits, or I'll just drop it off at Whole Foods or whatever Amazon drop off there is available, and go about that route. Or any company has a solid return policy too, or process. Too. It's so easy now.
In shopping for you in person?
I think it depends on if it's a basketball shoe. I think I want to try it on.
Right.
The problem,
not that I'm burning through them.
The problem with Nike, Paul, is that what do you see in terms of what runners are wearing?
It's a mix of there's Hoka, New Balance,
On Cloud.
Period.
Yeah.
Right.
That's really all I'm seeing out there in terms of like the runners.
Yeah.
I don't see any Nikes out there. Nike has just become a fashion
I think that
statement.
They lost their way on developing new running shoes that got the running populace to adopt them, and they fell asleep at the switch in R&D, and it allowed for some of these smaller
the quality
companies
went
to make
downhill.
inroad.
Right.
Yeah. Another company that I was going to sort of dovehorn into, what would the dovetail into this?
I should have let you work that one out.
Thank you. I appreciate the assist. Into this conversation was Allbirds, because I own a pair of these shoes. They were once valued at $4 billion, the company, and they just sold their assets to American Exchange Group for $39 million after being valued at $4 billion at one point. And that is shocking to me, because I really like the pair of Allbirds that I own. They're really comfortable.
I do too.
And if you had told me today that they're just basically sold for nothing, I mean, yeah, I get it was $39 million, but from where they were at $4 billion valuation, it's astounding to me, and points to how really difficult this footwear business is in general. But I like the product, so that's kind of shocking to hear that they've basically been sold for nothing. Have you ever tried one of those on?
No.
They're lightweight, pretty comfortable.
Super lightweight.
These are running shoes.
And some of them.
No, I would not use them for running. I would just more like
Sorry.
walking around the office
Obviously,
or
I had
walking
no
around the
idea.
house. Just, I would say more like leisure shoes, right?
They've tried to
Tucker?
come out with like running shoes, and I think that was kind of where they went wrong. They tried to go like in some of their selections, like the athletic route, where it's just like everybody wanted Allbirds to wear around on daily use and around the office, and it was huge in Silicon Valley.
They tried wool leggings. That didn't work
they?
out too well for them. Yeah, they turned out to be see-through.
I've never participated in such a long conversation about shoes before. This is like watching Sex in the City or something. My God, what's happening?
Don't think that's the same. Why don't you go back to your oil futures or charts? That's all the time that we have here on the Financial Exchange. Thankfully for Marc, where you can hear no more shoe chatter. We'll be back at it tomorrow, though, at 10 a.m. Thanks so much for joining us.